G'day, this is Jason here from Forex PipSnager 2.0, and today is November the 18th. I know I usually do these videos on Thursdays, Tuesdays and Thursdays, but I was a little busy this week and I missed the Thursday. So here it is today, Saturday. Not going to miss the video. I'm going to recap it for you. So here we go. We're looking at the pound yen 15-minute chart. Here was Wednesday, okay, and it was a mess. It was a mess. As you can see, we can drew the support lines here. Now, if you were trading the Asia session, which is the time to trade, okay, there's your support, okay, broke down through it right here, but there was some support right here, this wick from the opening, okay, the opening of the new day. So you wouldn't have sold it right there, and the gap wasn't perfectly correct either. Then it came crashing down, took out those lows, took out that low, and then it just told you, bang, sell it right there. So within 45 minutes, you could have made 64 pips. Your stop was about 50 pips. You would have made your one-to-one, okay? There's no buy here or here. There's no gap, correct gap here. So this is your one trade. This here was not another trade. Well, it was, but it just didn't look right after crashing down so fastly here. So fast. It crashed down like 90 pips in a half an hour. I wouldn't have done this trade. Too far, too fast. Okay, the only trade was basically right here. Then in the U.S. session, you had, you went through. Geez, I'm all, I don't know. I can't talk good today. It's like God's not letting me talk good today. I'm sorry. Here's the resistance right here. It went through it with this candle. If you bought it right here, your stop would be 54 pips. You didn't make it. Okay, you didn't make that 54 pips. Anyway. You don't do trades here, it's the end of the day. You do trades here, it's the beginning of the day, just like over here, beginning of the day. You don't do trades at the end of the day. So, right here, gave another trade. Okay, there is your resistance. We went through the resistance, went up, came down right here. You'd have looked at buying it. There's 30 pips to there, and you had 25 pips. So you could have done this trade. Okay, but look, total potential pips gave you 70 pips. Okay, and then there was a trade in here. Okay, but as you can see, it's only like 25 pips. Your stop is 47. The win-loss ratio there is not correct. I wouldn't have done the trade. Okay. Then, again, lots of trades here because it chopped up and down. Broke up through here. Here's your resistance. You had 36 pips to go there and 38 pip stop. So you could have done that trade, and guess what? It never went up to your target. Went up about 20 pips. Then we had a sell right here, but okay. To the support, it was 22 pips, 29 pip stop. Not the right win-loss ratio. I wouldn't have done the buy here because it was too close to, we'd have to break through here. Break up through here, then come back down, and it didn't do that. They sold off of resistance right there. Okay, then this big bar down came crashing down, and yes, there was a trade because you would have drew a line like this, okay? You see all that support, major support, and it crashed right through it. So right here on a retrace, you would have sold it 83 pips with a 48 pip stop. Okay, we got through that pound yen. What a ride that was. Let's take a look at the pound now. Back to Wednesday. And it's another crappy thing. We would drawn a line like this. Okay, broke up through there. Would have bought it there. Went up 57 pips with a 27 pip stop. You're good. Came crashing down. No trade in there. No trade in there. Look at this. Look at this. Look at this crap all the way through here. See all these blue dots down here? Tells you don't trade, don't trade. It's just a mess. That's what these blue, light baby blue dots are for, ladies and gentlemen. In case you haven't read the manual or listened to my videos, that's what those blue dots are for. Ta ta ta. Don't touch. Just like your little baby girl, baby boy, you go ta ta, ta ta, hot, hot, ta ta. Don't touch, meaning don't trade. Okay? Looks like this, don't trade. It's just gonna they're just gonna screw you somewhere. Okay? So anyway, then she broke down here at 2 o'clock in the morning. But, and there's a but. Look what it did. There's no trade here. There's no trade here. They basically bought off of support. Zoom baba. Zoom shakalak and took it up. Okay? Here it broke through, yes, the resistance up here. You see the resistance? Yes, came down. You would have bought it here, okay? Whip-de-doo, went up 30 pips. Then it gave a sell fake at the end of the day. You don't trade at the end of the day. You only trade at the beginning of the day. Never the end, but the beginning. And the end is so close to the beginning. Okay, so you would have took your little handy dandy line. You would have drew a line right through there like that. Okay? Broke up through there, came back down, buy, boom, shakalak, 56 pips. Your stop would have been 30. You would have done you would have done well. And then there's the next trade right here. Boom. Crashed through it. Sold here. 50 pips. 40 pips. That's it. Let's take a look at the yen. Is the yen a little bit simpler? No. It was a very choppy week with lots of short signals, with lots of, not good. So here's Wednesday. Here's your support right here. Crashes the support right here. You would have sold it. Down it went, 75 pips. Right here, crashed, broke up through the resistance. Right here was the resistance. I can draw the line. There it is. Would have bought right here. Hey, it went up 28 pips. With the 42 pip stop, that's not equal librium, okay, of take profit, versus stop loss. I talk about that in the book. You need at least 1-to-1 win-loss ratio. So if your target is 30 pips, your stop can't be more than 30 pips, okay? Then you pass on the trade. It's very simple and easy to look at and make your mind up to. And you go, okay, right here I'd be buying. Okay, my stop's right here, 43 pips. Okay. Well, actually at the time, that's right. You didn't know on this one. There was 38 pips up to this level here. Yeah, it's this level here I'm talking about. The next level is 60 pips up here. You didn't really have it, okay? Because it's possible they would have bounced off that level. That's what I meant to say. Jeez, I was lost there for a moment. Sorry about that. Anyway, here's a buy trade at the beginning of the day, 40 pips. Here's a sell trade, went down 33 pips. No trade here. Here's a sell. There's a trade. Next trade is right here. Down it went, 53 pips. And then there's another trade here. Broke through this mess right here. This candle told you, hello, we're going to go down because we broke through here. We broke through it and closed below it. And boom, you would have sold right there. And there's 50 pips again. Okay, let's take a look at the last thing, which is gold. Okay, let's look at Wednesday here. Okay, first trade of Wednesday is right in here. Okay. It's taking me long to get through these setups today. Broke up through here. This was the breakout right here. Pulled back into the line. You would have bought it. There's 60 pips. The 30 pip stop. So you had a 2-to-1 win-loss ratio right here. Beautiful trade. Worked out. Okay. Came down. Crashed through all the support. The support can be an angled line or a straight line. Okay. Boom. Sell. 68 pips. 60 pips. That was a 1-to-1 win-loss ratio. Then, right here was a buy. Never went anywhere. 36 pips. Big deal. with a 30 pip stop. Then on the opening, okay, you got major resistance right here. So you had to make sure that to prove it that it went up through here, which it did, okay. Then pull back. You would have got long right here, okay. Your stop would have been 55 pips. It would have went against you a little bit here, okay. If you would have held on, went up again a little bit, down, and then it went up massively, and it would have gave you 142 pips. So if you didn't get in here, we would have drawn a line again like this. Okay, you wouldn't have got in here, but as soon as we broke up through here, this is the major point right here that told you, hello, we're gonna go higher. Even though when they burst through, at first they always come back and they make it look like, we're faking you, get out, get out. And all the smart money buys when it comes right back to the trigger line right here. You have like 7 pips drawdown, and then they just rally it up. 120 pips. So anyway, that's it for the video today. Thank you once again for watching. This is Jason Sweezy from Forex.PipSnager, excuse me, 2.0. And I urge you, if you haven't picked up your copy yet, I urge you to click the link below this video and pick up your copy. You'll be glad that you did. It's a simple system that works. And please hit the like button and please subscribe to my YouTube channel so when I shoot the next video, you'll get it right away and you can come and watch for free. Have a great weekend.